Do you notice how IBO went up about 300% during the early openings of the market, but now it's back. It was back to about $1.25, and it went up again all the way after the market closed to $5 and stuff. So this morning, what I my topic was about elimination method, and I was trying to say that we don't only use these elimination methods in just stock trade in mathematics. You can also use it in stock trading. You always have to think like when you wake up in the morning and you are going to do a stock selection, like if you go to pre-market, um, we have, let me use my account here. If you go to pre-markets, you want to select stocks, but what do you look at in the morning before you select those stocks? Um, you always want to change the way you do things. You always want to change the way you think, because the stock market is not static. It's not like waiting, or it doesn't use the same formula. Everything, the news that spike a stock yesterday might never spike the stock today. So all the time you have to think, you have to change the way you think, you have to change the time you trade and everything. So uh this morning I was looking at stock. The only reason I did that was 3 days ago. I jumped into a stock, lost about $200, and then afterwards I realized that the market capital was so low. So I was like, oh, if I had known, I wasn't going to waste my time. So I was looking at the stocks, and I my first thing to look at is the capital, because if a company is serious, they have 700 million, 1 billion, 500 million, right? This company wants to grow. They want other people to invest in. If a company has $1 million, 500,000, two employees, and then all of a sudden they're going up 300%, what do you think the company is doing? So I'm not trying to tell you that there's no opportunity in that stock. But what I'm trying to tell you is use the elimination method to eliminate stocks that has the potential for pumps and dumps, because they've written this news so smart way that sometimes it's even hard for you to spot it. But as time goes on, I'm going to show you guys how you can also build your own chat GPT and use it to scrutinize this news for you at a rare time. But the market has been creating a way that we always think that we have to be quick and whatever. No, you have to do the other way. You want to be patient. You want to be able to read this news. You don't use just news for trading. You want to be able to look at the market capital, which is very important. I have two things that are very important for me: the market capital and also the float. You can trade without any indicator. I bet you, if you understand what is going on behind. So you understand that these stocks, because of their market capital, they will um, come back to reintroduce more shares, you know, when their stock spikes. They will dilute the value. They can they can't rely only on value revenue. They sometimes have to take the advantage of the price surge and then raise some funds. This is where pumps and dumps comes in. So the elimination method is so important that when you wake up in the morning and you're going to trade, what you have to do is put that in your head that there are certain stocks that I have to eliminate, either by avoiding to trade it, or I'm going to see the opportunities. But when I'm in for a minute, two, and I'm up, I'm out. I don't care how long this stock is gonna go. Uh, in the morning, the first stocks that are pre-market, the first stock that was moving was SAG. After the market open, it went up a little bit. Let's look at the graph over here. It dropped all the way to 94 cents. After the market went up all the way to 124. But what did it do? It dropped all the way here, kept dropping. The stock was up almost 80%. Look, it dropped down more than the percentage that it went up. So what kind of stock will do this? Because when you have the bigger companies like Apple, Google, whatever, when they go, they don't go up 10%, 70%, whatever, but they will never drop to this because when they put out news, it also affect their reputation. So even though they will massage the news, they know how they will do it. Market opens in the morning. If you watch the video that I put there, I was talking about these three stocks because I was looking at their market capital also. So let's just go back and see. This stock has 11 million as a market capital during the morning. Let's go back and see after hours and put the same stock in and see what is the market capital after hours. All right, so I can't show what is here, but if you go to uh stockanalysis.com, you will see that as of now the market capital is 6.7 million dollars. When the market opened, this stock was so up and then it dropped. But why did it drop that way? It is because in the morning, what I was saying is like when these small caps um surge during the market, they are finding a way to raise. They cannot just depend on revenue. They're finding a way to raise capital. So they have what do you call? If you look at that is why I always talk about float. So we have the free float, which is 1.1 million, and they have shares outstanding, which is almost 10 million. So anytime they need money and they see that the capital, the price of the stocks has gone up, they will go back here and then put sell some of the shares at a market price. So you will be in. You don't know. All of a sudden, the stocks that was up here will just drop on you. Okay. Let IBO came after the market has opened. So pre-market, uh, um, I didn't even see it at pre-market. It wasn't on this. But because sometimes they don't want you to be able to analyze, to be able to read, to be able to understand what's going on, they just wait when it's 10 minutes, 20 minutes for the markets to open. That is where you see this stock. And when you see it, it's just moving. So right there, the FOMO comes in. You are over here, you talking about, okay, if I don't get in, I'm going to lose. So you get in without thinking. But remember, that is how the market is also created for you not to think, especially if you're a day trader, for you not to think. And if you don't think and you get in, what do you think is happening? You're giving your money away. So you always want to remember that there's something called elimination method in mathematics. But it's not just for math. You can also use it in stock trading. And if you're going to use it in stock trading, what you have to do is always look at things that doesn't make sense. And if it doesn't make sense before the market open, it will never make sense when the market opens. Um, if you do that and you miss a stock, don't worry about it because the same way that you missed that stock, that was the same way you were going to lose that stocks. So let's go and see when the market open. Today I traded two stocks. I traded SAG, which I made money on it, and I traded uh PSTV. I know this stock before, but I'll get back to it. Let's go to IBO. I saw it when the markets open. Okay, the stock started from 50 cents. If you look at here, this is just 1 minute. Let's go to maybe 5 minutes or 30 minutes to make the chart simple. Okay, so the shaded part, the black portion is when the market open, and then this part is when the market opens, and then this part is when the market has closed. So during the market, this stock was what, $1.25. It went up. It has a news. So let's look at what news the stock put up. It wasn't any news that is great. So uh it doesn't have any the news was not anything that was great, but it still went up, which is the price action. It went up a whole lot during the day. Went up all the way to, it was like it went up about 300% the first time that I saw it. It just also dropped all the way to 180 cents. Who would hold a stock that had gone to 250, that dropped to 180? Do you know how much you'll be losing? But the stock came back after the market opened, market closed after hours, went up all the way to, no, I'm not, sorry guys, I'm not looking at the, okay, sorry. So the stock was 50 cents. It went up when the market opened. It went all the way to $2.50. It dropped back to $1.25. Nobody will hold on to these stocks if they have bought it at the peak, because half of your money is already gone. But before the market closed, it went up all the way to $5.10. Okay, how much was the market capital before then? And as of now, it has almost $50 million. Let's give this stock like 2 3 days, and then let's see. If they are in for business, they will never sell uh, shares. But if they are not in for business, they will come back and dilute the shares, because if you have a stock, you have 50 cents per share, have 50 or 20,000 shares. Do you know how much you have right now? Everybody is going to cash in. So you wake up, the stock that was up to today will be just going down. But why are we doing this? Why are you analyzing this stock? The only reason we are over here today is for me to show you guys that um the stock market is it's not a place that you can sit and think that, okay, When I see stuff going up, I'm just gonna jump in. You have to sit and analyze. You have to do a whole lot of things because you never heard that anybody has hacked into the stock market. There's a reason. Every successful person in this earth, one way or the other, is connected to the stock market because whatever they have going on is connected to the stock market. Every institution that is successful is connected to the stock market. So why will you just wake up and take your money, jump into the stock market without even understanding what is going on? So if you you want to be successful in the stock market, the key points that I want to tell you is like when you look at the low caps stocks, very often they're going to reintroduce and dilute their value. The stock with no rear backing will always crash quickly after they rise. When I say no rear backing, like the news, you don't see any news. They never launch. They didn't get FDA approval for anything. Even if they got approval, you can have about 10 stocks getting approval the same day. But what kind of approval did they get? Did their medication cured 90% of the people that they use in their testing? Was it internationally accepted? Did maybe Europeans accepted it? United States, so those are the things that you have to look for and be able to eliminate that. Even though there's so many approvals today, I'm over here going to look at the type of approval that is almost 100%. Now, it is almost 100%. What if the market opens and it doesn't go up? This is where you always want to join um, me and Trade Smart every morning so that we do the analysis. It's not every time that the stock is going to go up, even though they have a very good news. And you think that, hey, I saw it's very cheap. Let me buy it. I used to wake up like every 4 a.m. I mean, till today, I'm still up. But now I don't wake up to buy stocks because I myself too I have to hang out with the big boys. I think that Warren Buffett is sleeping at 4 a.m. And I know that Elon Musk is sleeping. I also understand that the hedge fund managers are chilling. Why don't I wait for the market to open? Because that is where they want to make money. And where they put their money, I should join them because if you watch Jim Cramer, he said it perfectly right that they can change the course of trading with the sheer size of their capital, amount of money that they have. They can just dump it. It doesn't mean the company is bad. Buy it down there when it's at the bottom, and then but because you are losing money, you are so afraid, so you're going to um also get out. The large capital doesn't move uh like this. They are so stable. If Apple had gone up 10% today, there's no way the market will open and then Apple is down 11%. But we are doing day trading, remember. You cannot use Apple to day trade unless you have a large funds. You are using these small caps to trade. So you always use the elimination method to avoid getting caught in these traps. So what did you talk about today? I talked about this morning how to avoid certain stocks by using the elimination method. If you wake up and you look at the stock and it's going up 400%, but the market capital that they have, if I talk about the market capital, I mean, I'm using Weibo to do this demonstration. That's my the platform that I use. If you have a small account, this is the platform that I'm using as of now. Weibo is going to go premium, and I'll do a video, and then we look at whether it's going to benefit as the day traders or not. But if you wake up and you open this and you have the key statistics right here, it will just show you right here the market caps. when the stock was 50 cents, the market cap was not 23 million. So 1 out of 100, it will just go up. If you take the daily, let me expand this and then let's see how this happens. I have here is a daily candle. Okay, every bar here is for 1 day. How many days do you think this stock went up the way that it went up today? If you count it all the way, you will see that almost every day it didn't do that. Okay, almost. So once in a while, things like this will happen just to confuse you. But if you're gonna be a trader, it's like a profession. You have to plan it. You have to have a strategy. You have to stick to your plan. That it doesn't matter how long this stock is gonna go. I do not even care. All I care about is I have a daily goal. When I meet it, I'm out. When I'm out, I just close my computer and tomorrow will come. If I lose money, yesterday after hours I jumped into a stock that went up so much yesterday, and then I went in with 200 shares, which I shouldn't have. I thought I was gonna have like overnight. The market open, I was already down 90%, $90. Okay, so my first trade it brought me about. I was able to clear it, and then I got about $50. And then my second trade was the one that shoot me. Okay, but sometimes the market will close. It will continue like the way this stock has continued. Anybody that had this stock at 50 cents now has thousands of dollars in the account. If they are not greedy, tomorrow morning they will have to sell the stock. If they are not greedy, they will even sell it after the market has closed. So you wake up and this stock is coming down. And if they don't sell it, the company itself also need money, because this company is like um have small market share, has small market capital, you know. So in conclusion, what I will say is don't just put your money into stock. If you're a day trader, this is intraday. You are taking decisions in a split second within the day. What are some of the uh, triggers for a stock to be potentially moved within the day? We cannot look at long-term finances of the company because we are trading today, and this is so risky. If anybody tells you that day trading is easy, they are lying, because I've done this for almost 8 years. When I started it, even paper trading, you have to subscribe to it. So it was hard for me to, and I lost a whole lot of money because everything I have to try with my own money. Until today, I can trade without indicators because the indicators comes after the stock has opened. What about before the stocks open? If you don't know which stocks you are looking at before the market open, you are going to sit there and be thinking about these indicators. But if they say that about 90% of day traders have lost money, are they all not using the same indicators? Yes, they are using it. To end, all that I will tell you and all that I can say is low cap market stocks often reintroduce or dilute their value. Stocks with no real backing will crash most of the time after they go up. Large caps don't move like this, so they are more stable. Use elimination method to avoid cut ups in these traps. Um, Anything that doesn't make sense before the market will never make sense during the market. If a stock goes up so much, don't get involved. You don't know who get in at what time, and you don't know who want to sell, who want to buy. There are so much that you will never see. but you always want to align yourself with the big boys. For instance, a typical example that I will give you is if you have a $1 million company and a company like an Apple want to invest $1 billion in that company, that right there, I can trade without any indicator. Because what did Apple see in this company that they want to put their money in? They have the researchers, they have the experts more than I do. They have the technology more than I do. So if they do that, I'm not even wasting time. I'm gonna get in. So I will use the eliminating method to eliminate every stocks and now pick this one. Hey, if you think this is helpful to you, just go ahead and subscribe. Every morning, sometimes I put up uh, my analysis, but you can reach out, ask questions, whatever, and I'll go ahead and answer at any time because as a beginner trader, I know what I went through when I didn't have anybody. When I came to the United States, from Africa, over there, I was just having a shop. I didn't understand nothing they call stock market until I find this book from Goodwill, who was able to help me. The guys that I know that were trading all quit because they lost money. I never quit, even though I lost money from the initial stage. I never quit. And that is the same reason that I want people back. More often than not, when I hear from people, what they say is like stock market is difficult to trade. I ask them, how long have you been trading? How long have you been learning? No education. So you want to become a doctor for a day without going to school and you think you're going to be successful? You think you are not going to jail? You think you are not going to kill people? Or people are not going to beat you up because you're giving them wrong medication? It come back to the same thing. It come back to the same thing. When it comes to trading, you need to learn. Never put your money on this trading as a beginner trader. We're going to go through what I went through, save you a whole lot of money. There's so many free resources out there, so many things that you can learn. Go ahead and learn. Practice with the paper trading. If you cannot make money with the paper trading, you can never make money in the stock market. See you tomorrow morning, and we will do the same analysis. Thank you.